All right. Welcome to another episode of Tuesdays with Audi, and I am your host, Audi. So for the past 2 weeks, you have seen what has happened to me in terms of AMC as well as PEI, and those two were two different experiences as they relate to me investing during the pandemic. So I am going to now reveal to you how, once you are in the market, there are only technically two positions, and those two positions are you either have too much or you have too little. Take for example, in AMC, when I was in the company and the price went up, the amount of shares I had when the price started to increase, I felt as though, oh my gosh, I could have bought so many more shares of AMC at the cheap price before it actually hit the price that it was at, and I would have been so much better in terms of actually profiting or capitalizing on more profits. But then in PEI, seeing that I had all those shares, now that the price was down, I'm like, I have too many shares. Like, what was I thinking in terms of buying all these shares? It's like, this is too much. I'm losing too much money. What's going on here? Yes, guys, that's pretty much what those two positions are. If your share price is doing good, you don't have enough. If it's not doing so well, you have too much. For a simple example, let's just say you buy 5 shares of a company at $8.40. Yes, guys, I'm not going to use multiple of 5s or multiple of 10s because I'm tired of hearing these things. If you have nothing else better to do, take out your calculator, follow the calculations, and let's go ahead and make it happen. And don't forget, hit the like button while you're at it as well. Buy 5 shares of a company at $8.40, you pay a total of $42. Now, if the price of this company doubles to $16.80, your current value is $84. So what do you be thinking to yourself is that, oh my gosh, when the price is so much cheaper, I should have bought so many more shares instead of the little bit I bought of just being 5. But on the contrary, if the price of the company halves and now it's trading at $4.20, and now your current investment is worth $21, you would likely be beating yourself saying, okay, well, why did I put so much money in this company in the first place? But this is what this episode is going to help you in terms of giving you some key things that's going to help you deal with those two major positions in the market. If you are like me, who tend to actually not deal with loss very well, and also tend to kind of, worried about fear, uncertainty, and doubt, which is FUD, you will likely have a difficult time in the stock market. But here are some things that help me to manage my aversion of loss, as well as my fear, uncertainty, and doubt, and handling some form of anxiety. Dealing with FUD, the very first thing I do is that I do my due diligence in terms of researching the company. And here are some simple things I look for in a company when I am looking at the company. The debt to asset ratio, the price to earning ratio, which is the PE ratio, the book value of the company, the free cash flow that they have on hand. Are their current assets able to cover their current liabilities? Because if they can't do so, that means that they are very much in a good position. And how liquid are those current assets in terms of handling the current liabilities that the company currently has? There are more technical things that I look for in a company. Those are just some basic stuff. But this is not what this video is about. But however, if you would like to know some more technical things I look into for a company, you can go ahead and comment in the comment down below, and I'll do a video on it. But if not, then life goes on. Second thing, after you've done your research, write down the pros and cons and the facts of the information that you found about the company, as well as your opinions down on paper to determine how much you know about the company and what is it that you're thinking that's going to help you to actually go into this company based on your own personal opinion that you have actually made up of this company. Write those things down. Don't just say it in your head, don't just say it out loud. Write them down. The third thing, determine how much you want to pay for this company. You would never go into a store and pick up an item and not look at the price. And even though you look at the price, you always determine how much you want to pay for that thing. Because if it's not in your budget, you don't pay for it. Same thing in the stock market. Once you ask how much you are willing to pay for it, you set the price that you want to pay for it, and then you move on from there. And that is going to be an entry strategy into this company by setting the amount that you are willing to pay for this company. Next thing, the exit strategy. At what price are you willing to sell in terms of a profit as well as sell for a loss? Because you need to figure out when is it that you're getting out. But the thing is that if it does profit and it goes up, if you can take out your initial investment of the company, something I tend to actually do is take out my initial investment and some profits. Once I take out my initial investment out of the company, as well as some profits, then the rest of the money that's left in the company, that's pretty much me playing with house money. It's like, that helps me in terms of managing my anxiety. Because now that my money is out of the company, it's less anxious for me to actually deal with this particular process. And especially if my money is out of it, oh no, it's no longer my money, oh well, I guess I already took out my money and took out some profits. I just happen to sit here. That's the company's money. That's the stock market's money. I just want to see if this can actually earn me some more money. And if it does decrease, well, it could have been my money if I actually withdrawed it. But then again, my money I already put in the company is out of it. So therefore, this is just free money. Once you have all of those things ready in place, you've done your research, you had your entrance and exit strategy, you ask how much and you set a price that you're willing to buy and also sell this company for a profit or a loss. Now to wrap it all together, whenever time has progressed, as we do on a daily basis, when you find yourself at a particular point where you are like, oh my gosh, what is going on? Like, what is this? Just go ahead and refer back to your notes and see why is it that you made those decisions, and whatever new information that you currently have at that time, you can use that information to help influence your decision at that time. Instead of beating yourself up, you can look back at the old you and what the old you decided to do. You can thank them or either tell them something that you shouldn't have told them. But then again, don't hurt your old self, because they only was doing what they were capable of doing based on the information that they had. So now that you have more information, hindsight is 2020, you can go ahead and use that information to help to influence your decision that you are making. And you write down those facts and those reasons why you are making that decision down again, so that once again, when time progresses, you can look back at the reason why you made that decision at a given time. So that all helps managing anxiety and loss. So for me personally, it's like I never actually noticed how much me doing these things in the stock market can also be applied to my daily life. Because every day we have decisions to make. Whether it's signing a contract, deciding to leave a job, whether deciding to stay on a job, to get in a relationship, there's so many decisions that we have to make on a daily basis. But the thing is that we never tend to write down the facts and the information that we have at that given time for why we actually went into those decisions. And then later on, when we find ourselves at a certain point where we are doubting the decision that we made, we can always go back, or for personally, I can always go back and look at the reasons that I had in terms of why I made the decision. And now that I have more data and more information, I can use that data and information to restructure my decision in terms of the decision I made earlier. So I'm not saying that this is going to solve your problem, but then again, it's going to help to actually limit you from beating up yourself because of your anxiety or dealing with loss and doubting yourself with the uncertainty that you had now that you have more information. That's something that is applicable to you every single day. Use it in the stock market, use it in daily life, but at the end of the day, it's up for you to use or not and take action in terms of utilizing those key things in your mental health as well as your daily life and your finances. So with that said, thank you for stopping by. Don't forget to hit the like button, subscribe, share, comment down below if you enjoyed this particular information. So peace, love, enjoyment. Deuces, I'm Audi. See you guys next week, where we will continue on the topic of your mental health, your finances, and life.